Happy Saturday to my Wyke or Hudson County family. If you don't already know, my name is Joe Greco. I'm the vice president for the Hoboken, Jersey City, and Bayonne offices. Um, and what I like to do on Saturdays is give an update on market conditions that are affecting you guys right now. So let's just hop into it. I like to keep these really short, but I hope you guys find value in it. Um, what we're going to focus on today is one thing. It's the idea that volume amplifies a market condition. Okay. And what that essentially means is that in a market that is appreciating, meaning that every home that goes under contract, the next home is going to be listed just a little bit above it. Okay. The more volume that's taking place is the faster and greater that that market's going to appreciate in its bull run. Okay. And vice versa. In a market that is depreciating, the next home is not being listed until this home goes under contract, right? So this home is going through its price reductions, and this home is coming in listed at that new number, okay? And what's happening in that scenario is, again, the more volume of if only one home sells that entire bear run, right, the price doesn't change that much. If 300 homes sell that bear run, that volume is going to lead to price action. Okay, so just keep those two concepts pegged in mind. So what we're going to do is very briefly go over inventory and price action for Hudson County today. For the markets that we have offices in, inventory in Hoboken. So we're going to start at the top. Okay, inventory in Hoboken went up 117.5% in the last 30 days. Okay, that is a massive, massive increase in inventory when there had not been an inventory increase in almost 90 days. Okay. Number two in inventory increase is downtown Jersey City at about 41%. Okay. But downtown Jersey City has had a progressive increase in inventory over the last few months. 117.5 in Hoboken, 41 in downtown. What about the rest of the area? Greenville and West Bergen are up 33% in inventory. Lots of new listings. But Bayonne is down 6.2% in new inventory, and Jersey City Heights is down about 2.3% in new inventory. Okay, so those markets are tightening up a little bit. My expectation is that those two neighborhoods, and I think we're going to see this reflected in price action, okay, is that I know we're going to see it reflected in price action because I'm looking at it. But what's happening is inventory is down because those listing agents and those sellers are already pricing in where the dip that has taken place. Okay, so less sellers are willing to go to market. More sellers are probably kicking around ideas of renting their homes out or just trying to kind of stay in place. Okay, compared to neighborhoods with much higher new inventory, where what is happening is there hasn't had to be as much pricing in of these issues. Okay. If we look at market liquidity really fast, market liquidity is down in downtown Jersey City by 70%. It is down in Hoboken by 72%. It is down in Bayonne by 63%. It is up in Greenville and West Bergen by 60%. Okay, so there is a lot of sold homes starting to catch up with the new listings in Greenville and West Bergen. And then the Heights, it's only down 7%. Okay, so the Heights inventory is down 2.3%, which is the lowest variation over the last 30 days, either up or down. And it's also market liquidity has the lowest variation up or down at down 6.1%. So I'm sorry, the Heights and the Square, not Greenville and the Heights. So the Heights and the Square. So keep that in mind. Okay. Now price action. So what is this new inventory and what is the current situation of market liquidity? How is this affecting price that have gone under contract, homes that have gone under contract within the last 30 days? So downtown Jersey City, the notorious DTJC, is down 14%. Okay. In sold in under contract pricing over the last 30 days. The Heights and Journal Square is down 9.5%. Greenville and West Bergen is up 4%. Okay, price action in Greenville and West Bergen is up 4%. And like I said, the market liquidity jumped 60%, right? So a lot of sold homes, the solds are catching up with the new listings. Okay, so when you have this happening, this shift right here, this delta, that whole jump is happening at one particular time in the market. right? So what's happening is it's locking in a value, a price action for the month, and what that did was actually push up the pricing for Greenville and West Bergen. Bayonne, astonishingly, the current market in Bayonne is down 31%. Okay, I looked it up just to see if there were major outliers. Like all of a sudden, did Bayonne have primarily condo sales or single family sales versus a lot of much larger multifamily sales 30 days ago? And really, the housing stock variable was, I mean, that wasn't much of a variable. Like it's kind of, there's a very similar percentage of multifamilies and single families and condos that have went under contract in the last 60 days. So, but that would account for a lower inventory, right? When we talked about Bayonne, we talked about new inventory only being up 6.5%. So that's because that 31% is now priced in. Okay, so if you have a buyer in Bayonne, it is very likely that the homes that you're showing, these net benefits to them are already priced in. And Hoboken price action is down 3.1%. Okay, but here's the expectation. If I'm out there in the market today, Hoboken and downtown Jersey City just saw massive, massive spikes in new inventory. That new inventory is going to give the opportunity for volume to play its deadly game, okay, of amplifying market condition. That 117% inventory jump in Hoboken, and if you're in my Hoboken office, you've heard this from me before. Spring's coming, and this low absorption rate, like train tracks that we've been on, that's allowed our pricing to remain relatively strong. Well, when you increase inventory 120%, right? Volume is going to play its market condition game. Okay, so that's it for me. I hope you guys found this useful. If I'm an agent in the marketplace today, what I'm looking at is Greenville and West Bergen. If I'm on the buy side, okay, prices are probably going to go up a little bit there, right? Because its market liquidity is up, its price action is up, and its new listing inventory is down the most in the entire county at 33%. So there's less new listings to show, and they're selling faster than before. Okay, so that tends to push the market up. Hoboken, downtown Jersey City, it's the exact opposite. Lots of new listings. Market liquidity is dropped off where there's less solds to offset that new listing inventory, and where downtown is pricing it in a little bit with a 14% change. Hoboken hasn't yet, 3.1. So I'd be keeping my eye on Hoboken pricing over the next 30 days. If I'm a listing agent going on an appointment, I'm probably going to go for maybe 3 months for my comps, and I'm really going to tighten that up. I'm gonna dial that scope all the way in, and probably discount anything that has went under contract in the last 60. Anything outside of like 30 days, I would discount it, and potentially heavily. Okay. All right, guys. Hope this was helpful to you. I look forward to working and seeing all you guys throughout next week. Good luck. If anybody needs anything from me, my phone's always on. Hit me up. Take care, guys.